Hello and welcome to the Superposition Guys podcast. My name is Yuval, and my guest today is Rob Jesudason, CEO and founder of Serendipity Capital, a 1.3 billion permanent capital vehicle investing in quantum computing, communications, and sensing technologies. We discuss how investors, both institutional and retail, can evaluate quantum companies across modalities, with Rob arguing that triangulation across experts is essential since, as he puts it, modalities are like religion where everyone believes they're right. Rob shared his view that the quantum industry is transitioning from lab science to managerial execution and engineering scale, that governments should partner with the private sector rather than being the first check, that some countries should aim to be the fastest integrators of winning technologies rather than the innovators themselves, and much more. We hope you enjoy this episode. Hello, Rob. Thank you for joining me today.
Hi, nice to meet you, Yuval, and thank you for the opportunity.
So, who are you and what do you do?
So my name's Rob Jesudason. I'm the CEO and founder of Serendipity Capital, and we invest in early stage companies that enhance and secure critical technologies and infrastructure. And quantum is absolutely one of the technologies that we really focus on.
But not the only one, it sounds like, right?
Not the only one. I mean, it's technologies like AI, cybersecurity, semiconductors, space, satellite, and quantum. And I think when we have these conversations, we often talk about technologies in silos as long as if they're standalone things, but it's actually the magic happens when you combine the technologies, right? So it's security on semiconductor chips. It's space communication, quantum secure communication. So we focus on where these technologies intersect to protect basically Western nations and the US and its allies and both governments and corporates.
How large is the fund? And I know you have a few quantum investments. So, what's in
Yeah.
your portfolio?
So the first thing I'd say, we're not a fund, we're a permanent capital vehicle. And so what does that mean? That means we're a company. And so when people invest in us or give us money, they become shareholders in a company versus unit holders in a fund. And that means we're not driven to deploy capital in a certain window or exit investments during a certain window. The size of the business is $1.3 billion US dollars. And we have been investing in quantum since inception, which was 2019. But my background in quantum, I'm a business person, not a physicist, and I've listened to your podcast every week diligently, and you have very eminent physicists, so I wouldn't claim to be one of those. But I was on the management board of a bank, a very large bank, and we made an investment with the federal government in 2013 in quantum. And that triggered my interest in quantum. And when we set up the firm in 2019, quantum was a key focus, and we've been investing consistently since then.
In some of your investments in quantum?
Yeah, so we invest across modalities in quantum computing, quantum communications, and quantum sensing. So I'll talk about a few of those. So probably the investment that people know the most is Quantinium. So we went on the cap table in 2020. I was on the board, and we basically invested in every round from 2020 through to the IPO. And today we remain the sixth largest shareholder in them. And as you know, they are vertically integrated full stack quantum computing company on their fourth system. We're invested in Monarch Quantum, which is photonic laser light engines out of California. Photonic lasers is a multimodality, capability or part of a quantum computing system. It's typically 35 to 50% of the bill of materials of a quantum computer, So we're invested in them. In the UK, we invest in Delta G, which is a quantum sensing company. Their sensors can sense, identify objects 35 kilometers under the surface. Invest in Quantex, which is an Australian quantum atomic clock company that has sent its atomic clocks into space with SpaceX. So, you know, we've invested in companies that are looking under the surface. We've invested in quantum systems that are vertically integrated, selling into governments and corporates, and we've invested in quantum atomic clocks that are being sent into space. So we're broad church.
I think it's very tempting to talk about the public markets. You know, I think at Quera, the question I get every day is, "Oh, are you doing a SPAC anytime soon?" and so on. I'm not going to answer that. I just ask the questions, right? But how do you think about the companies that are in the market right now in the public market? First, as a permanent capital, are you does your charter allow you to buy shares in a public company in quantum? Do you think there are too many, too few, too early, too late?
So I think it's a great topic to talk about. So, you know, our mandate allows us to invest in private companies that go public and hold that equity. And it also allows us to invest in public companies. So, you know, there's the philosophical issue of should companies remain private for longer? Should they become public? And I think you can make the case for either. But let's talk specifically about the quantum sector. And I think the reality is if you're deeply embedded in the quantum ecosystem and you've been around for a while, rightly or wrongly, there's been a little bit of negative selection in the people who've gone to SPAC, right? So anyone who's an investor or an operator, as you are, you know, knows when people are doing private rounds, knows who can successfully raise capital, and knows who has gone and done SPACs, right? I think where Quantinuum was different, and I'm not saying this because it's a portfolio company, but it was an IPO, right? And it was an IPO where they had to talk to long-only investors and strategics and get the support to do a formal IPO process and list. And I think going forward, there will be lots of great quantum companies that will do IPOs. I'm not particularly critical of SPACs. I think it's a route, but I'm not sure, you know, I think there's some very good private companies who are not public because they can raise money in the public, in the private markets. I think Quantinuum was slightly different because their largest shareholder was a strategic who happened to be also breaking up as a public company, Honeywell, right? So it was a slightly different situation where they could have remained private. They had a very large strategic shareholder and they were sophisticated enough, had the track record enough, had the strategic support and the long only support to do a formal IPO process. I think the rest of the sector that has come through SPACs, there's some credible companies, but it's much more of a mixed bag. I think the future of the quantum industry is not a lot more SPACs, but more great companies going through the IPO process, getting a proper institutional capital base and strategic capital base versus a retail capital base, right? I don't think, you know, you're passionate about the quantum industry, your listeners are, so am I. I don't think it's particularly good for quantum to trade like crypto, right? The future for quantum is for it to trade with less volatility, right? With long-term public support for those stocks. And so I think we're in a transition period.
I mean, I think you mentioned that you're not a physicist. I only have a graduate degree in physics, so from a lot of my colleagues, I don't understand anything about physics either, but we can have that debate some other time.
Yeah.
So how does a retail investor who just reads, oh, quantum will solve all the world's problem one day, how do they choose which public quantum company to invest in? Or maybe that explains the volatility that you're describing.
Yeah, so I'll make 2 points. So one is, how does the retail investor come to that decision point? And I think it's very hard, right? Because there's so much narrative, and there's some businesses where narrative is fair, but physics is physics, right? And narrative only goes so far. I think there's also, I think there's a, I think certain companies in the quantum industry have slightly done themselves a disservice by by creating a gap between the PowerPoint presentations that people will read and the white papers that a lot of non-technical people don't read, right? And so there's a lot of momentum trading, and that leads to the volatility. What I'd expand the point to a broader point, that in a world where more and more private sector money is coming in, where many of the people, including us, are not physics PhDs, right? How do even they evaluate companies? And how we approach it is we've built an ecosystem. So we only ever sold shares to senior executives from who had run large infrastructure companies, national security operatives, and scientists. We took a stake. Actually, one of our most recent investments was we took a stake in Emergence Quantum, which is a R&D lab with 25 physics PhDs. And we also have our ecosystem of portfolio founders, right, who are physics PhDs. And we triangulate, right? And I think what you have to do, whether you're public or private, is it's a global industry. You're going to have to look at companies across the world, across the stack, and triangulate. And the reason is, I always compare modalities to religion. Everyone believes there's a God, but they believe they're right. Right? So just because you've got one senior advisor who's a neutral atom expert, or a founder you're backed who's a trapped ion expert, very rarely are they going to say, look, to be honest with you, I reckon these two other modalities might be better, right? So actually you're going to have to triangulate. And our view is the future is multimodality. And we think there are 2 or 3 modalities that are really interesting, including neutral atom. We think that's absolutely one of the winners in the end game. And I think QERA are one of the winners in the game. We believe in trapped ion, and we think superconducting, spin qubits, across the 7, right? So we've taken a house view that some are more promising or some will win than others. But then within that, I think triangulation is really important. And I think, unfortunately, it's hard enough as a private investor in an institutional business. I think it's almost impossible for a retail investor today. But I'm interested in your view. I mean, you've obviously thought about this issue yourself.
Well, a couple of things. First, I interviewed many CEOs from many different modalities, and everyone, or not everyone, but many of them are convincing. Say, oh yeah, my spin qubits are going to rule the world because of this, or my whatever it is that they. And I remember asking one of them, well, if this is so great, why isn't everyone doing it?
Yeah, exactly.
And he basically said, he had a good answer, I think. He basically said, look, I've been doing this for 20 years. I have forgotten things that others even haven't learned yet. It just would take 20 years to catch up to where we are. I sometimes give the analogy, I mean, you could be a fantastic oboe player. That doesn't mean you can play the violin tomorrow. Yes, you understand music, but the technique is completely different. The one question that I like to ask is to say, okay, well, I understand you believe in your modality. Let's assume you are convinced that that's not going to work. You're hitting a wall. You discovered something that just doesn't work for you. What's the next best modality that you would choose? And I think that's an interesting question. That's a telling one for where at least
Yeah.
the
Yeah.
insiders feel about something that's not just theirs.
Yeah,
What
and
do you,
I think that's why I sort of take a view that, and you've had other guests who've talked about the attributes of different modalities and the reason why different modalities are useful for different use cases. And I'm not going to rehash that, right? But I agree with that, and I think the future for the winners is to be multimodality, at least for a certain period. This comes also back to the universities, right? Because there's certain, as you know better than me, right? I'm sitting in Boston today. The Lucan Lab has produced more than one neutral atom company. Oxford Physics Department has created more than one trapped ion company, right? So it starts there, as you rightly say. They're people who have spent 20 years of their life on a single modality, and they come through these schools, and therefore they end up there. And there's nothing wrong with that. And they all have their attributes. And as I say, in a world of 7 modalities, I think our view is there are 2 or 3 that are going to be the pivotal ones in the next 3 to 5 years. And I think the winners are going to be companies that take advantage of that. The other thing I would say for your listeners is I think the industry is in a fundamentally different place today than 6 years ago, 7 years ago, when we started investing in quantum at Serendipity, which is it is about the science, it is about modalities, but we're entering the phase of managerial execution and engineering scale, right? So the challenges for the company is you have proved as a company you're one of the leaders in your modality. Now you have to build a scale institution that can ship one system, then several systems. And that's a very different challenge, right? That's not being in the lab. That's not getting some financing. That is tens of thousands of engineering space, right? That is building engineering processes, and that's a different challenge. And that's the challenge actually the winners are at today, right? Building scale enterprise. And it's going to play out in the next 3, 4 years. And, for us, it's never been more exciting.
when we spoke about your portfolio, you mentioned several companies, and they're all hardware companies, or at least primarily hardware companies. Where are your software investments?
Well, so I would say we invest across the stack. So we have mentioned some hardware companies. Monarch, I would put in the sort of control systems, like middle layer. But we've invested in I'm sure the guys, Blue Qubit, they're out of Harvard, Shankar's business, and you know so we've been more focused on the hardware and the control systems at the moment because the really for software to progress, you need the systems to be higher quality. You need the error correcting to be higher quality. I think we're moving into the era where you know software, it's really algorithms, right? Become more interesting. We really like the Blue Qubit guys. I'll name a company we're not a shareholder in. I think Phasecraft, really interesting company. They are out there, right? But I think the magic or the action, whatever phrase you want to say, I think it's on the hardware side, it's on the system side, it's on the control system side, where often people over focus on the hardware side. I mean, I think they're going to be control systems players that are going to be multimodality, and they're going to be oligopolists or monopolists in that area. And from an investor perspective, that's really interesting, right? But the algorithm companies will come, And I mean, what's your personal view? Do you feel that like that the time is now for algorithm companies? I mean, we've been relatively slow. We've been very selective. Maybe we've been too slow. What's your view?
My view is that the hardware is getting there. I mean, at Quera, the company I work for, we announced a deal with AWS to put a fault-tolerant quantum computer on the cloud in
Yeah.
2028. And I say, oh, okay, well, who's going to use it? What are they going to do? What algorithms? So assuming the hardware works, and it works, but it could work better and larger, so there's still absolutely work to do. There's going to be a point where the software matters. Some of the software, especially the software that's close to the hardware, may be something that the hardware companies just want to keep themselves, or
Yeah.
or NVIDIA and CUDA, right, for that purpose or something
Yeah.
like that.
Yeah.
But
Sorry,
so
I must say, if I kick myself on one investment we should have done that we didn't do, was Classic. And I know you used to work for Classic, right? And we looked at it in 2020 and 20 or 21, and we looked at it against in 22, and we should have done it, and and we didn't, because we were like, is it too early? But they've done really well.
Well, for a permanent capital company, I mean, sounds like your horizon should be a little bit longer. But yes, they're an excellent company. I enjoyed working there. I enjoyed helping them with a portion of their journey, and I hope they will succeed.
Yeah.
As a shareholder as well. Let me ask you a different question though. Let's assume that tomorrow you decided that it's time to go into public service, and the government calls you and said, we're making these huge investments in quantum, and we've got this budget, and we want you to help us allocate it across various companies. Do you do I don't want to call it communist thing, but do you just divide it equally to 17 slices and give the same amount to each company? What's your do you pick winners? Can the government do that? What would you recommend to the government to do in this case?
Yeah, that's an excellent question, and a hugely topical question given sovereignty issues around technology. We've thought a lot about this, and we talk to a lot of governments around the world, and I'd make 3 or 4 points. One is, all governments aren't the same. So let's talk about a group of countries that could legitimately try and build the definitive world leading system in a modality, or create a leader in part of the stack, e.g. AMSL, right, in semiconductors. I think that group of countries, I do think you sort of have to pick winners. I'm not about spraying it across the ecosystem, and there's a certain amount of ecosystem things you have to do. But the reality is, the winners need to scale, they need capital. And if you don't have capital, you may lose them. And I'm from the UK, and Cambridge Quantum, Oxford Ionics are good examples of good companies that ended up being part of large US companies today, right? And so now the issue is, are they qualified to pick the winners, as you rightly say? And therefore, I think you have to partner with the private sector, right? And you shouldn't aim to be the first check. You should be the last check. Because too often these governments are the first check, and they're picking the wrong companies, and they're propping up companies that the private sector really don't want to fund. And I think there are particularly examples in continental Europe where that would be the case. I'm not going to name, them, but there are examples of that. I think what the US has done very well is, you've seen in the last 3 months the government investing in some companies, but actually most of these companies, the leaders in the US across modalities, have primarily been private sector funded. There have been DARPA grants and other things on the edge, but what has driven their scale has been private sector financing, and actually the government's come in towards the latter stages. And you can see that even with AI, some of the debates on AI. I think there's another set of countries where they're smaller countries, they have capital, they have intent, where it's not particularly realistic to build the leading system in a modality, right? And this might be a controversial topic, but my personal view would be, Australia, maybe Singapore would fall into, maybe Canada might fall into that group of countries, right? But what you then can do is, can you be one of the first countries to get the latest system into your country from the leaders? Can you then build an ecosystem around it? Can your corporates in that country partner with that modality or that company to build use cases faster than anyone else, right? So I guess I would say there's a set of countries who potentially are the innovators, and there's a set of countries that they realistically should be aimed not to be the innovators, but the fastest integrators of the winning technologies into their economies than anyone else, right? And I think that's where, I would say governments should lean into.
That's an interesting perspective. And by the way, that's maybe where software comes in. I mean, if you don't think that your country can be the leading superconducting vendor, then maybe you could be the leading software vendor for quantum computers or for a particular type of application. But I think your point.
If you take a country like Australia, right, which is got two of the biggest mining companies, or Canada, right, between them they have disproportionate global share of mining, then you should create the software for that industry and dominate that industry, right? But you might be leveraging US hardware, right, to do it. So I that's exactly what I mean.
You've been in quantum a few months now, or several years. What's new? What have you learned in the past 12 months that you said, oh, I wish I knew that before?
So I'd say there are a few things. Whether it's over 12 months, over 3 years, but it's there's a recency to it. I think it's this point that I've said that we're out of the lab now, right? We are into an engineering world, and that has different requirements for management teams, right? And it's never been more important in quantum to have the balance between the engineering talent, the business talent, and the...
Unfortunately, we experienced a recording problem, and the last few minutes of my conversation with Rob were not captured. He did choose Oppenheimer as his dinner guest. One reason that he thought that the physics and the government policy are coming together after many years, just like in Oppenheimer's time. I thanked Rob for a very interesting conversation and hope to have him again in a future episode.